Hello everyone, dear friends, Max Cash is in touch. Today in our video I will tell you how to determine the breakdown of the level. You've probably encountered situations when you opened a deal from a level and the price continued its movement, not noticing this level, and went further. Such situations are very common at the moment. The main thing is to learn how to correctly identify a false breakdown. Either it has not a false breakout, or it has a rebound. But before you start watching the video, I would like to invite you to our Telegram channel, in which you will be able to automatically copy my trading. The link to my Telegram channel is located under this video. We also have a lot of educational materials, so come in, subscribe, write me in private messages. The link to Telegram is located under this video and in the pinned comment. And we can start. We open this currency pair and perform an analysis. If we look at the 1-minute chart, we can see that the price has approached a level indicating that a short sell should be opened. However, in this situation, we will open an up and go trade. I will explain why I opened an up and go trade by marking the level that will be broken through with a red line. I have also marked the level that the price will aim for with a green line. If we switch to the time frame, more than 1 minute, in this case, 510 or 15 minutes, we will see what are the levels here, in essence, and not on 1 minute. Accordingly, if you look at the chart on different time frames, we will see a perfectly suitable upward trend, and we will see a clear and obvious level that I have marked with a green line. This tells us that you should always analyze the market at different times if you are trading for 1 minute. Always check the time frame for 51,015 minutes. The next important factor is the end of the candle as expiration. As you can see, I am analyzing on a 5-minute time frame, and I've opened a 5-minute trade for a raise. With the opening of a new 5-minute candle, you can also see that I am now opening a 2-minute and a 1-minute trade. With the appearance of a new 1-minute candle, 3-minute candles, when the price approaches a level that should be broken, we find the trend on the higher time frame. We determine the next global level that the price will seek to reach, and when a new candle opens, depending on the time frame you are analyzing, you open a trade to break the level. Why do we open a trade with the opening of a new candle and in this particular situation? When we conducted an analysis of the level breakout, and the key point is when the expiration time of the candle ends or a new candle opens. The most impulsive movement begins to manifest itself actively when a new candle opens and, consequently, when a new candle closes. We open a trade at the moment when a new candle opens. I am sure many people have often had situations where a trade fails in the last seconds. Please note that it may fail at the last moment. This is the most important factor, and I am sure that each of you has had a case where a deal was disrupted in the last seconds. Moving in the direction you don't need, you make a loss. Accordingly, it is advisable to open a deal when opening a new candle, regardless of what time you are trading, 23 minutes or 5 minutes. Not everyone pays attention to this, but it is one of the most important factors for successful trading. You need to open a trade as soon as a new candle opens, fill it, test it, and check its accuracy. But I think you already understand this because whenever you open a trade, regardless of the expiration time of the candle and the remaining time until it closes, you open a trade at the end. A few seconds before the trade is completed, it becomes unsuccessful. It becomes a loss. Always open a trade with open candles, and the trade will be successful. As I showed you in this video by opening 3 trades in the same direction with a new candle on different charts. This does not mean that you need to open each trade with the beginning of a new candle, but there are situations where the price takes off and moves many points in the desired direction, regardless of the direction and expiration time. The point is that there is always a possibility. In order to trade from the opening of a new candle, there must always be consolidation on the chart. This can be an upward or downward consolidation, or a sideways consolidation. In addition, always remember that you should only trade in the direction of the trend. Never open a trade against the trend. This is very dangerous. The first thing you should do is always identify the trend on all time frames. This is where I say goodbye to all of you, and I look forward to seeing you on my Telegram channel. The link is located below this video and in the comments.